What's up, guys? Welcome back to the channel. This is still me, Solomon Wisdom, and today we'll be talking about common mistakes made by smart money traders. Some mistakes are avoidable and sometimes you learn from other people's mistakes, but the best way to learn and the best way to improve is learning from the mistakes made by other smart money traders. Okay, let's get into the video right now. One of the common mistakes made by smart money traders is that once some of them buy a course, they buy a smart money course or they watch a free course here on YouTube, you see them rushing to the price chart, selecting other blocks or their supply and demand zones without backtesting the strategy, without practicing the strategy to know if the strategy really works. This is one of the mistakes they usually make. I could remember earlier this year when I offered the free mentorship program on smart money strategy. After each video, you always see me telling you guys to go back to the price chart and practice this strategy. I'm only saying that to help you build confidence, to help you build trust on the strategy. You know, one of the ways to succeed as a trader is having trust in your strategy, believing in the strategy you trade with. Okay, so that's why I always tell you guys to go back to the price charts and practice the strategy. You see, these traders, once they buy the course, they hear that trading with order block, trading with supply and demand zones helps you understand that you are trading with the institutions, you're following the institutional footprints. You just see them rushing to the price charts without really backtesting the strategy, without really testing the strategy to see if the strategy truly works. Once you are a trader, you're into this trading business, one thing you need to understand is that what works for your mentor might not really work for you. So when you go back to your price charts, when you move to the price charts and practice these strategies, you'll find yourself seeing something different. Although it might be similar or it might not work exactly the way it works for your mentor, it might work in a different way for you. So this is one of the things you need to understand, and this is why most smart money traders fail. They watch the videos, they buy the courses, and they move to the price chart without practicing the course. They move to the price charts trying to trade with the strategy, trying to trade from other blocks, to trade from supply and demand zones, to trade from fair value gaps, without really practicing the strategy, without really knowing if the strategy truly works. If you are new to smart money strategy, if you are new to this particular strategy, one favor I would like you to do is going back to your price charts to practice this strategy. Don't just practice for days, practice this strategy for months. Go back to your demo account. Don't trade this on a live account, because once you buy this course, you don't practice it, you go to your live account and you blow your money, you lose your money. You go back spreading fake news about the mentor, saying that the mentorship doesn't work or something like all those kind of stuff, spoiling the mentor's name. They feel the pain of losing their money. You see them spoiling the mentor's name. What I'm advising you to do is test this strategy out first. It might not work for you. The strategy that works for me might not work for you. I trade with smart money concepts. What might work for you might be trading with indicators, or trading with support and resistance strategy, or trading with divergence strategy. You understand? So the strategy might not work for you. What you have to do is firstly practice this on your demo account. To go back to your price charts, this is TradingView. You can buy the premium package and practice with it, backtest it, use the replay button, test this out, check how it works. It might not work exactly, like I said before, it might not work for you exactly the way it worked for your mentor. So what you have to do is practice it and see how it will work for you. Understand? So this is one of the reasons why smart money traders fail. Like I said, they fail to practice the strategy. Okay, this is one of the reasons smart money traders fail. There are a lot of reasons why they fail, but I'll be treating 2 or 3 reasons today. The second reason why they fail is because they stick to only one time frame. If you watch the last video on the mentorship program, you can check out that video at the playlist. The video is still there. I have about 5 to 6 videos during the mentorship program. The last video I talked about top-down analysis. Top-down analysis is very, very important. As a trader, you shouldn't disregard top-down analysis, because top-down analysis is simply analyzing from the higher time frame coming down to your lower time frame. Let me show you something quickly. Let's say you have, this is your 1 hour time frame. Price did something like this. You understand that this is your, you can choose your order block here, your demand zone, and now you see price. You're now waiting for price to give you the confirmations that it's about to change direction. You got the confirmation and you'll be expecting price to push higher, right? This is your lower time frame. this, I'm just calling this, let's say this is your lower time frame, not 1 hour time frame. This is your lower time frame. Okay, now you've seen something like this on the lower time frame and you got the confirmation you need. The lower time frame is telling you that price is gonna move to the upside, right? Now what if on the higher time frame, maybe the weekly charts, the monthly charts, or the daily charts, this is going on the daily charts? On the daily chart, we have this break of structure. I have to change the color of this daily chart to make it look a bit different. Okay, this is your daily chart. You have this break of structure to the downside, and now this is your order block. I want to ask you this question, like I just explained right here. Looking at this price chart, this is your lower time frame, and your lower time frame is telling you that you should go long, that you should buy from here. But you moved to the higher time frame, and what is the higher time frame telling you? The higher time frame is telling you that price is sitting at a supply zone. You'll be looking to sell from this supply zone going to the downside. So what will you be doing here? Will you be taking the trade on the lower time frame, or will you respect the higher time frame buyers? This is a question I'm asking. So this is one of the reasons you should do a top-down analysis. Those that have been watching me on this channel, you know I look for my directional bias on the higher time frame. I start from the daily. I usually start from the daily time frame. From there, I move down to my 2 hours time frame or the 4 hours time frame to refine my zone, and I usually go back to the 15 minutes time frame to look for my entries. So it just depends on how you trade. Maybe you're a scalper, you usually stick around the 15 minutes time frame, the 5 minutes time frame, or the 1 minute time frame. So choose time frames that will work for you depending on your trading style, depending if you're a scalper, if you're a day trader, or you're a long time trader. Choose the time frames that will work for you. So always look at the higher time frames. Even if you are a scalper, look from the higher time frames. You understand? Analyze from the higher time frame, because understanding the higher time frame will put you at a better side of the markets. Okay, another mistake smart money traders make is over refining their zones. You see, smart money traders, this is another mistake I see them making. You see a trader, you get a zone. Okay, let me explain this with this price action right here. You understand that this is a pullback. Here is the pullback, and we got a good break of structure right here. This is your break of structure, and you have your demand zone over here. This is your demand zone. Those who usually make this mistake, I want to correct right here, are people who trade with the aggressive entry type, that is using the risk entry. Those that trade with the risk entry, you always see them making these kind of mistakes. You see them, once they get their zone, you see this is your zone. It could be order block. This is this bearish candle before this bullish move that has momentum. That's your zone. You map out your zone from there. I'm not saying refining of zone is not right. Refining of zone is very good. Refining of your zone gives you a better risk to reward ratio. It gives you a good risk to reward ratio. But over refining your zone can actually make you miss a lot of trades. Like this is, I'm on the 4 hours time frame right now, and this is my zone. You see them going back to the 2 hours time frame to refine the zone the more. Okay, here on the 2 hours time frame, we might not really see anything to refine. Now you see them go to the 1 hour time frame. This is the 1 hour time frame, and what can you see? We have another zone. They can refine the zone down to the 1 hour time frame, and how they refine the zone, you see that they missed this particular trade. Not only that, you see some of them going down, let's say 45 minutes time frame, to look for zone, looking for how to refine the zone the more. You see them going to the 30 minutes time frame just to refine the zone. Refining the zone, you see we have another bearish candle. You see them choosing, maybe choosing this one right here. They're still refining the zone. You see some of them going to the 15 minutes time frame, going to the 5 minutes time frame just to refine their zone. Refining of zone is very okay, and it's good depending on how you trade, but over refining your zone will always make you lose a lot of trades, and this is one of the mistakes some smart money traders do. My question is, why are you over refining your zone? Why are you refining your zone too much when you can actually wait for price to come back to your zone? You know, when price comes back to your order block or your zone, you can start looking for your entry confirmations. Why are you refining the zone too much? This is your zone right here. You can just go back to the 2 hours time frame or 1 hour time frame, refine the zone and let it be, because once price taps into your zone, you understand that that particular zone, institutions, their orders, their buy or sell orders are resting at that particular zone. So what's the essence of refining the zone too much when you can actually wait for price? Once price taps into the zone, you can start looking for entry, because in some cases you might not see price coming very deep to tap into the zone or coming below the 50%, you might see price a little tap into the zone and price is good to go. Price will move to the targets. Okay, so one advice I'm giving you today is stop over refining your zone. You can refine your zone a little and you are good to go. Once price comes to your zone, look for your entry confirmation and take your trade. Okay, so one other thing that kills smart money traders, one other mistake they make in trading is choosing the wrong zone. And choosing the wrong zone is a different topic I will talk about in a different video, because that topic is very, very deep, you understand. And another mistake I will be treating differently is how they map out market structure wrongly. Okay, this is some of the mistakes they make. Like I said, I'll be treating these ones in different videos, talking about how they choose the wrong zones and how they map out market structure wrongly. Okay, so this is all for today's video and I hope you got value out of this video. If you're totally new to the channel, consider subscribing to the channel and be part of this family. If you have interest in joining my Telegram channel, I share free setups every new week on that channel. Check the description box, the link is in there and you can join us. Okay, so thanks very much for watching this video.